Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, if we see amid rising volatility, Nifty continued its correction as it reached its 50-day EMA. Currently quoting at levels of 22,240. Nifty ended the day with a cut of 0.6%, while Bank Nifty too continued to relatively witness profit booking after it hit a lifetime high last Tuesday. Bank Nifty witnessed a cut of 1.25% for the day. Both mid cap and small cap indices too underperformed, with the index correcting by 1.95 and 1.89% respectively. From the sectorial index perspective, so if you see out of the 15 sectorial indices, 13 of them closed in the red yesterday. The only strong relatively outperforming sector was the defensive space, that is Nifty FMCG. This was mainly propelled by Hindustan Unilever, with the Nifty FMCG index managing to close the day 2.02% higher. While high beta sectors such as Nifty Realty were the worst performing sectors, witnessing a cut of 3.49%. Coming to India VIX, so if you see India VIX post witnessing a cool off below 10 levels towards the end of April, has swiftly witnessed a strong bounce back up to 17.5 and is now trading at a 14-month high. The rise in volatility is on expected lines and is indicative of increasing nervousness amidst the ongoing election and ahead of the election results due less than a month away. Till the time VIX holds the 20-day EMA levels, that is 13.5 levels, it could head towards the mark of 22-24 levels in the coming few weeks. This has led to an increase of IVs of put options, and hence the cost of put premiums has risen, leading to a rise in the hedging costs. Rather than entering into panic mode, one should focus on appropriate position sizing, controlling leverage position with effective risk management techniques, and remain hedged wherever possible. Coming to the levels for the market, so going towards Nifty levels, so going forward, strong support for the index lies at 22,180, 22,160 levels, while the resistance on the upside is seen closer towards 22,410, 22,430. Any sustainable move above the levels of 22,430 will lead to an extension of the rally in the short term towards 22,600, 22,650. If in case the index slips below 22,160 levels, it will lead to further selling pressure towards the mark of 21,950, 22,050 levels. Coming to the OI data, so if you see Nifty PCR has dipped further from yesterday's levels of 0.63 levels towards 0.56 levels. If you see, meaningful call writing at the current juncture is witnessed across 22,400, 22,500 strike, while on the put side it is majorly witnessed in 22,200 and 22,100 strike. So the overall range for the coming few sessions could be 22,430 on the upside and 22,180 on the downside. Coming to Bank Nifty, so going ahead, support for the index is placed closer towards 47,900, 48,000 levels, while the resistance is seen at 48,450, 48,500. If the index slips below 47,900, it will lead to selling pressure towards the mark of 47,000, 47,600, 47,700 levels, and any surge above the levels of 48,500 will lead to a surge towards 48,800, 49,000 levels. We also have the weekly expiry for Bank Nifty today, so the index could be a bit volatile, especially in the second half of the session. If we look at Bank Nifty PCR, currently it is at 0.52, clearly indicating that there is more call writing in the system at the current juncture in comparison to puts. So if you see, there is call writing which is seen at 48,300, 48,500 strike, while on the put side it is mainly seen in the 48,000 strike, implying a range of 47,900 on the downside and 48,600 on the upside. If we look at the sectors which are relatively doing good from the broader market, we have Hindustan Unilever Tech Mahindra, Britannia, TCS, CG Power, Oil, then Tube Investment, Tejas Network. These are the counters which are looking good based on technical parameters as well as the relative strength chart. Coming to the FII DI data, so if you see in the cash market yesterday, FIIs were net sellers to the tune of 3,668 crores, while DIs purchased to the tune of 2,304 crores. FI long short ratio for index futures has dipped towards 41.76 on a net basis. This as they sold about 29,680 index futures yesterday. On the stock futures front, FIs have bought to the tune of 136 contracts, while on the options front, FIs sold 27,928 call contracts and simultaneously purchased 99,963 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.